Imagine waking up tomorrow and seeing your investment down 30%, but it still pays you a massive monthly dividend or weekly. Would you celebrate the income or panic because your account balance just took another hit? That's the question every YieldMax investor eventually has to answer. Is the income really worth the anxiety? Let's talk about it. If you're new here, I'm just a regular investor trying to build enough dividend income to retire. No courses, no gurus, just sharing what I'm actually investing in and what I'm learning along the way. Today, we're talking about one of the most controversial ETF families out there, YieldMax. Some investors absolutely love them. Others wouldn't touch them with a 10-foot pole. And honestly, I understand both sides. Now, currently, I own two YieldMax funds. I own Chippy, which is their YieldMax Semiconductor Portfolio Option Income ETF, and also GPTY, which is their AI and Tech Portfolio Option Income ETF. And if you've been in the market and you noticed recently, AI and tech have been getting hammered. Now let's start with why people buy them. The distributions can be enormous. Instead of waiting years for dividend income, YieldMax can generate significant monthly cash flow right now, actually weekly. Both Chippy and GPTY pay weekly. Now, currently with Chippy, I own 28.92 shares. This is as of July 30th to Thursday, 2026. I own 28.92 shares at $61.83. The share prices right now is $67.29. And just so that way you can see, that is the 52-week low at $50.93. This was actually trading almost $90 a share. It was trading at $89.86. And my total return is actually 29.11. I've only had this a few months, and actually my total return was closer to 50% about a month ago. And this is my dividend income right now. As of today, it's yielding 42.35%. That's what it's yielding annually as a dividend income at $755.10. But, or actually, let me go back to this. It is actually 11.74% of my total income for my portfolio, which is 18 holdings. But look at the allocation. It's only 3.51 of my total portfolio. It's a small piece of my portfolio. Now, if you go back to GPTY, that is 43.49%. 45.77 is what my cost is, and it's trading now at $40.36. I bought this to replace GDXY, which was another YieldMax. That was our gold miners income fund, because that one was down total return just because energy costs had really affected gold miners, and that really had put a hurt on that particular ETF. Right now, I think that one almost has an 88% dividend yield. But as you can see, I am down significantly in total return. Right now, that is down 7.89 in terms of total return. And it's only 3.17% of my total portfolio allocation, and that is yielding a 41.36% yield. And that there is giving me $691.06 in dividend income yearly. Now, instead of waiting for years for dividend growth, YieldMax can generate significant monthly cash flow right now. If your goal is income, it's incredibly tempting. That monthly payment feels rewarding, especially if you're trying to replace income in retirement or reinvest every distribution. It's easy to see why these funds have become so popular. The income isn't free, however. Most YieldMax funds use covered call strategies tied to a single stock or to a set amount of ETFs. Now, do you guys own any YieldMax funds? Let me know in the comments if you do. How do you feel about them? Do you like them? Do you feel good about them? Are you watching them like a hawk every day, wondering if there's going to be any sort of NAV erosion? Now, this means your income depends on options premiums, and your principal can be much more volatile than many traditional dividend ETFs. When the underlying stock struggles, your ETF can struggle too. You might still collect a big distribution, but if your investment keeps shrinking faster than the income replacing it, that's where the anxiety starts. Now, I've invested in high yield ETFs myself. I like income, but I also learned that chasing yield alone isn't enough. Right now, that is my that is how my breakdown on my dividend portfolio is. QDTE is my number one performer, and that is a round hill fund. That is also it could be called a yield trap because that one is down share price wise, but it's paying me back, as you can see, substantially in income. There's Chippy, and there is GPTY, my next two. 12% of my income is there with Chippy, and 11% is with GPTY. So it's significant income, even though they're not big positions in my portfolio. Now, some holdings generate income. Others focus on growth. Others provide stability. That's helped me sleep a little better during market swings because no single investment has to do everything. Now, if you're getting value from this video, hit the like button and subscribe. Also, drop a comment. Let me know what you think, whether you have ideas, whether there's something you'd like me to, a topic you'd like me to tackle. Every week I share my real portfolio, my wins, my mistakes, and what I'm learning while building dividend income one investment at a time. Now, here's my answer. It depends on you. If you understand exactly how these funds work, if you accept that distributions can change, and if you can handle watching your account swing without making emotional decisions, YieldMax funds might have a place in your portfolio. Maybe they're going to do a job for you. Maybe you want them to provide income. Maybe you're in retirement. All you want to do is just have that income that's building weekly, monthly, whichever fund you use. But if a 20, 30, or even bigger percent decline is going to keep you awake at night, the income might not feel nearly as attractive. Cash flow is important. Peace of mind matters too. The best investment is also often the one you'll actually stick with through good markets and bad. Now, everything in this video is for educational entertainment purposes only. I'm not a financial advisor, and this is not financial advice. Always do your own research and consider speaking with a qualified financial professional before making any investment decisions. Past performance does not guarantee future results. Now, in my next video, we're going in a completely different direction. We're going to talk about how investing the bare minimum every single day could potentially lead to maximum results over time. You don't need thousands of dollars to start building wealth. There isn't an excuse to taking a couple of dollars a day and putting them in the market, doing that consistently and building something for yourself, whether it's to augment your income, whether it's to possibly retire early. Sometimes consistency beats big deposits. So make sure you're subscribed. You wouldn't want to miss this one. And if you enjoyed this video, I think you'll really like this one here, because I do have a growth portfolio, and it's not paying dividends every day, every week, every month, but it grows. And it's actually pretty boring. And it's actually entitled, My Boring Portfolio is Quietly Exploding. So it shows why sometimes the investments that seem the least exciting can quietly provide some of the best long-term results. I'll see you over there. And thank you for watching, and I'll see you in the next one.